Hey everyone, it's the Financial Reboot Investment Team with your market outlook for the coming week. The new month is upon us, May 1st on Monday. The old saying in the stock market is sell in May and go away, but it looks like we're going to have an exciting May this year, so you might not want to do that. So let's take a look at the economic calendar going forward. So Monday, we've got a lot of consumer spending, consumer numbers going on, plus the inflation number. That's important to the Fed because they're using that as a guide, as a target for the rate increases. Then we got a manufacturing index, and construction spending is always important because it tells you a lot about infrastructure and it does tell you about sentiment. Then Tuesday we've got motor vehicle sales, which if you're in the automakers and stuff, you want to pay attention to that. That also has an underlying effect on financials. You know, people buy new cars, they take out loans. Then Wednesday things pick up really quickly. We've got ISM non-manufacturing, and we've got employment numbers and a PMI. Then we close out the day with the Fed making their announcement, which is always very exciting. And we roll into Thursday with jobless claims. Take a look at the trade deficit, see if that's coming down, how things are working on that. Productivity, not as glamorous of a number, but important. And then factory orders. Factory orders are always important. And we close out the week with the non farm payrolls and the unemployment rate. These are your underlying numbers. People want to see wages go up and they want to see unemployment go down. So we'll see how these play out. But there's a lot on the board. Let's take a look at the markets real quick. The Nasdaq had a big week. It went over 6,000, and that reminds us of 2000. Um, I'm not sure how many of you remember 2000 when the Nasdaq first broke 5,000. That's why we pulled up this chart. We remember that day. They were throwing confetti on CNBC. They're doing their user cheerleading. They had no idea of the impending doom that was upon them, as usual with CNBC. The cheerleaders were in full force, but the defense was about to give it up. And as you can see, within 2 years, we were back down to under 3,000. It was just a terrific, horrifying crash for a lot of people. We made a lot of money on that. But you can see that was led up by a bubble. You see how fast that market went from 3,000 to 5,000 in less than 2 years. That's a lot of run for a market that never, if you even look at the chart, it never corrected. This has been more of a slow, steady growth. And so it might hold, it might not hold. But we want to start getting cautious going forward because it looks like things are a little overextended. And plus, two, the reason we want to be cautious is things aren't economically driven right now. They're news cycle driven right now. There's so much going on in the geopolitical arena that it's just very difficult to make precision strikes. And with Trump, it's just like last Thursday was a very good example. Google hit their numbers, Amazon hit their numbers. Uh, Nasdaq futures were up over 100 points, and Trump came out and said that he was taking a look at that uh, South Korean trade agreement and that he was going to make them pay for their THAAD missile defense systems. And that really just killed futures, went red almost immediately. And that's how powerful the news cycle is right now. It doesn't matter what kind of good economic news. I mean, obviously, Google blowing away earnings, Amazon blowing away earnings, most companies blowing away earnings. And it still wasn't enough to overcome that one statement by Trump that actually 2 days later, 3 days later, it was reaffirmed that we will pay for the THAAD system. So, I mean, this new cycle is very, very, very influential. So you want to be very careful, and that's why we're going a little defensive going forward. Now, on the S&P, is almost a red flag. This could not get over 2,400. It needs to get over 2,400 to break out of this channel. At some point, this is either going to become a top or a springboard. So, we had a longer, even longer base between 2,100 and 2,200. But generally, when they last this long, it ends up being a sell down. This was a buy the dip. As you can see, it just came right back up. We sat in that 2,200 to 2,300 range almost the same time, but there's a little more veracity behind this. So it's pretty much coming to the point where it's pee or get off the pot for the S&P. So we just want to be very cautious right now. Now, you might be wondering, what are you guys playing at Financial Reboot? I want to get in with you guys. Well, we just let you know we're going a little cautious. We're going to look at some puts, maybe some lotto puts and things like that, some defensive stocks, dividend stocks. We like dividend stocks that pay a nice strong dividend month to month. That way we don't have to wait through 3 months to get our cash, and a lot can happen in 3 months. So we don't like to be exposed for too long without getting paid. So we recommend the short string dividend paying stocks, which will pay you monthly. We have a couple that we like. If you want to find out those, and if you want to find out what we're playing, guess what? We have got a super offer. There's a link below this that you can click, and we are offering our newsletter, first time ever, $7 for the first month. Okay. Now, if you check this out, the clock is ticking. Okay. Let me hide that for you. The clock is ticking. So you guys want to click that link. It's only $7. Get in there. And make some money. If you want to play along with us, but you don't have $250,000 to become a regular client, this is the way to do it. Okay. So we'll talk to you next week. You guys have a great trading week, and aloha.